In Money Watch, markets closed the month out in the red. The Dow Jones slid today on news of the president releasing oil from the strategic reserves. The industrials dropped more than 550 points. A big chunk of those losses were in the last hour of trading.
The Nasdaq and S&P 500 also took a hit at the end of the day. Both dropped more than 1.5%. Joining us now is Tamar Essner. She's a principal at Vectis Energy Partners. And thank you for joining us. Earlier today, as we heard, President Biden announced the release of 180 million additional barrels of oil from the National Strategic Petroleum Reserve over the next 6 months to combat prices at the pump. What sort of impact do you think his announcement had on the market today?
Well, oil prices fell 6% on the news. And with that, they're basically at $100 a barrel in the U.S. So we've basically retraced all of the war premium pretty much that we have seen since Russia invaded Ukraine. So this is a really significant development. I expect that we will see a cooling down in gasoline prices over the next 2 weeks or so. The real question is how long that will last. We've seen from prior releases from the Strategic Petroleum Reserve that they tend to have a temporary effect in cooling prices, and then a few months later, prices are actually higher than where they were. So it's an important Band-Aid just because of this critical point that we're at where the economy really could move into a recession. But this is just a Band-Aid and really not a long-term solution to the broader problem of very high consumption and not enough supply.
So, Tamar, you said that the president's actions have lowered the price of a barrel of oil. How long until consumers actually see the lowering at the pump? So how long will they actually get their costs down to what it was before we saw these wartime spikes?
Great question. And it always seemed that oil prices go up like a rocket and then kind of just float down like a balloon. It will really depend how long gasoline stations will have worked through the inventory of gasoline that they bought at higher prices. So I expect that in the next 5 to 7 days, you can start to see a bit of a cooling down, but it will depend on the region and also the individual stations.
Tamar, the president also called on Congress today to impose fees on companies that, quote, sit on non-producing acres on federal lands and are hoarding without producing. What's your take on this?
I think it reveals a fundamental misunderstanding of how the industry operates. The industry doesn't hoard leases. Number one, they have leases that they can't drill on because they first have to conduct a lot of seismic and geological activity. So there's a lot of action that needs to take place in the oil patch before any drilling can actually happen. And once drilling happens, it takes a while to actually get that oil to market. The other issue is that the oil industry is facing the same sort of labor and supply constraints that are plaguing every single other industry in the States right now. So there's labor shortage, there's inability to get enough cement and sand and other steel casings that they need. So I think that the industry is doing what they can. And you are going to see production in the United States grow considerably year over year. But I don't think that the industry is hoarding leases and gouging. That's just not how the way the industry operates.
Tamar, another step the president is taking, he announced he's issuing a directive to invoke the Defense Production Act to boost the domestic production of critical minerals. Can you explain how this could impact our energy sector?
I think it's a really positive step. One of the big misconceptions that the war in Ukraine and subsequent high energy prices has ignited is this belief that if we weren't so dependent on fossil fuels, none of this would be a problem. That's not really true because in green energy, so-called clean energy, the supply chain is heavily reliant on another unfriendly actor, and that is China. And they control a big part of the battery supply chain, which is so necessary for electric vehicles. So I think this is an important step to try to onshore more of the mining that is necessary for batteries. And batteries are not just important for electric vehicles, but also for storing power that is intermittent, that comes from renewable like wind and solar. So I think it's an important step, but it will take a long time once the industry will conduct, geological surveys as to where these deposits of important minerals are, it will take a long time to build those mines and get them up and running. So this needs to happen, probably should have happened a while ago, but really important steps so that as we transition away from fossil fuels and more towards greener energy, we're not ending up in a similar situation where we are beholden to China.
Really interesting. Thank you so much for breaking down all of that sort of energy information. I feel like there's a lot that people don't understand, and that was really useful information. Tamar Essner, principal at Vectis Energy Partners, thanks so much for joining us.
Thanks for having me.